Best of Rutherford County for 11 straight years, you will know you will get quality work at a good price. Stop by for an appointment or call 828-245-8889. We're open Monday through Friday 9 to 5 and Saturday 9 to 1.
We are back. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. The program is Gilbert Talks Taxes. It's Gilbert and Emily this morning. So glad to have you here with me in the studio. And Lou, my engineer. Tom, sorry you couldn't make it. We were missing you. We are doing tax returns, as the commercial just said. We are all hands on deck. We are accepting new clients for business returns, personal returns, corporate returns, not-for-profit returns. The telephone number is 828-289-9300. I've had people that have moved and have said, can you still do my tax return? Oh, yes. We have a portal. We have access online, especially if you're a prior year client. We had one client very concerned, and I thought that was so sweet. They offered him a job. He had to relocate to Virginia. And he went home and told his wife, he said, will Gilbert still be able to do our taxes? They have a complicated return. They've got a lot of things going on, and there's a lot going on with that return. And he's like, and she said, well, I'm sure he can. Let me call him and ask him. I said, oh, you guys are so sweet for thinking about me. Thank you. But yes, we can. We can do your returns. I actually, at one point, Emily, we had a client on every continent at one point, except Antarctica. Yeah, and so we need one of those scientists that works down there. How do we reach out to those guys? Okay, Emily, it's your job this week. I want you to find me a climatologist that's stationed in the Antarctica. Tell him we will do his tax return for free, just so we can say that we have a client on every continent. We did. Now, I think the one fellow moved back from Australia. I don't think he's living there. But he still is an Australian. He still is an Australian citizen. But I think he's living in South Africa right now. So anyway, we have a client on almost every continent. Almost every continent. Maybe I'll just go down there. Maybe we'll take a vacation down there. You can actually do that. Go down there for a couple of days, and that would no. Emily's nodding no. Okay, no. Let's forget that one. Okay, so getting back to the last story, yes, file your tax return. Do not wait is the official stance of the IRS. Retroactive. Okay, now, I want to tell a story, because what is a Gilbert Talks Taxes program without talking about scams? So I talked about the ERTC, which is the Employee Retention Credit. Now, they're calling it Employee Retention Tax Credit or Employee Retention Credit. It's the same thing. There are not two things. We've had people call and say, well, I don't want the ERC, I want the ERTC. Okay, no, it's the same thing. So it's a COVID thing. If you kept employees, I'm just giving you the nutshell. If you kept employees working for you, what do you have? Emily's always got a little something there. Okay, you can just jump in if you've got anything you want to share on that. So the nutshell is this. You kept employees working during COVID. You had a substantial downturn, or your business was shut down because you were non-essential, which is a sad place to be, Emily. Non-essential.
We were essential.
Huh?
We were essential.
We were very essential.
The IRS wanted the money.
Yeah. I don't realize how essential we were. Yes, Lou, you were essential also. So make sure I let everybody know they were essential. Yeah, it's almost become like a status thing. I was essential. So if your business suffered, if your business, you had a downturn. Now, originally, the original tax code said you had to have a 50% reduction in business from pre-COVID, so that was 2019. But then later, those lines got kind of blurred, and then they said, well, if you just had a substantial reduction, there wasn't a number, then all these other things happened. Well, most people took the PPP, which was the Payroll Protection Program money. There was a few other programs people took advantage of, and this thing kind of fell off the wayside. But now, this all of a sudden has become a big deal. And there are a lot of promoters promoting this, and just blatant, unethical. It's been lying. They've been doing this ERC for people that didn't even have payroll. Oh, Lou, you look shocked. Oh, Lou, I've been talking about this for a while now. They are. I actually had a lady reach out to me and wanted me to refer client stuff to her, and she said, well, they can even schedule C-filers without payroll. And I said, well, wait a minute, it's employee retention. So it's in the name, okay, employee. How are you getting people money if they don't have employees? She goes, well, we're going back and creating those 941s. I said, okay, I have two words for you, tax fraud. Have you ever looked that up in the dictionary? Because that's what you're committing. Oh, no, we're, blah, blah, blah. And then she quickly, when she saw I wasn't going with her on any of this, she quickly got off the phone. It was like that phone call was over. So, and the IRS has already put in jail people for doing this. And they are going to continue putting people in jail for doing this. And it's promoters that are doing this. And the promoters are charging a percentage, which is illegal to do. So let me explain that. People don't understand that. I do your tax return. Lou, I think I can get you back a $10,000 refund. Tell you what, Lou, if I get you a $10,000 refund, I want 15% of it. Uh-oh. Okay, that is illegal. You cannot do that. I can say, Lou, I'll do your tax return and I'll charge you $150. That's totally to do your tax return. Or I can say, Lou, I'll do your tax return, I charge by the form. If your tax return has a lot of forms, and I have a printed list of what I charge for every form. Some forms are $1, some forms are $3, some forms are $30, because some forms just have a lot of work. So, and by the way, I bill both ways, just for people out there that are listening. So we do flat rate billing or we do by the form billing. It just depends what's involved. I rarely do hourly billing on tax returns because it just depends. There's so many factors involved. Do I have to research? What do I have to do? We like flat rate or we like by the form. But for me to say, how about give me 20%? I'll tell you what, if I can get you 15,000, give me 20%. Blatantly illegal, like it's written in tax code, you're not supposed to do that. It's not a gray area. Well, these people are charging a percentage of what they get you back on ERC. And the 941, which is the form you fill out to make this claim, the 941, you actually have to amend the 941, so it's a 941X is the actual form. That is a tax form. So by the definition of the code, to say, I'll do it and charge you 20% is illegal. And they're doing it, folks, they are doing it. They've done, I don't even know how many, 200,000, 300,000. So
Shamelessly.
Shamelessly was the IRS's commissioner's word. So what they did is they put a moratorium on this. There's a stop on it. They're going to look at every one of them one by one. What happened is initially they were just putting these things through the system. And the way the IRS system works is they put the claim in, and if the claim is reasonable and it looks like, it can fly, the computer will go ahead and adjust the 1041, and if there's a refund due, because some 1041 adjustments,
941.
I'm sorry, 941s, thank you, Emily, that's why I have Emily here, 941s. If the 941 is reasonable, they'll go ahead and issue a refund, but some 941s, some amendments are because the people owe more money. So it goes both ways. Normally, well, I don't know, 300,000 of these things hit. They issued probably hundreds of millions, I don't have a number, of dollars in refunds, and realized, well, something's wrong here. Because as soon as all these promoters saw their people getting all this money, the greed factor just kicked in. And that's my take on how this thing's evolved.
Kind of like reminiscent of the Dead Horse Act.
The Dead Horse Act. That's why Congress created enrolled agents, Emily. Yeah.
Because people have, yeah.
Yeah, because there's this thing called greed that kicks in. So what Emily's talking about is the Dead Horse Act. After the Civil War, Washington told the farmers in the South that they will reimburse them for the livestock that they lost during the war. Just bring us receipts or whatever. So farmers were going to Washington, D.C. with their inventory of everything they lost, and Congress was just giving them money. And they were coming back to the South going, they just gave me money. Everybody was going to Washington. So after about 7, 8, 9 months of this, when they convened, they realized that they had paid for more dead horses than there were horses in the South. And somebody in Washington said, we need to do something about it. So this is a pre-internet age, of course. It's pre-electricity age. They decided to create enrolled agents. That is how our office was created. It was called the Dead Horse Act. They sent agents into the South to help the farmers make these claims. And if you were a farmer on like 3 acres, you got to explain how you had 100 horses on those 3 acres, okay? You had some explaining to do.
Yes, so that's what brings to mind with this ERC.
And that's what happened. So it ends April 15th for tax year 2020, and it ends April 15th of 2025 for 2021. And you're going to see these guys really dial it up, talking about the mills that are promoting this, the fraudulent mills. So that brings us to the scam of the week story. I have a client who's a not for profit, and they have volunteers working there. So a volunteer answers the phone, as they do, and the person on the line says, I'm the accountant, I need your 941s, I'm preparing your ERC. So the reasonable. So the volunteer, who doesn't know that I am the accountant for this not-for-profit, doesn't know Gilbert, right? Asks her boss, says the accountant's on the phone, needs these to do the ERC. And the boss says, okay, they're here in the computer, go ahead and email them to him. Okay. Oh yeah. So she sends it to him, and 3 days later, they get this package back in an email saying, well, you're going to get $56,000 back. We've calculated all your ERC. You're going to get $56,000 back. And by the way, this what added credibility to the scam was that I am, in fact, working on their ERC. We're going to work on it, but because of the moratorium with the IRS, I said, let's wait more till the end of April. Let's get it in there. It's going to sit anyway. Let's just wait and see if the IRS sorts this out at all. And so I kind of put it on hold. That was back in November. I kind of put it on hold and said, let's just wait a little bit. You can get some more guidance from the IRS. I'm not worried about the April 15th deadline. We'll hit that because I do their tax return anyway. We'll kind of do it all together. So she was like totally fine with that. And so kind of, oh, he's working on it. He's getting ready to do it. Go ahead and send it to him. At no point did she stop and ask, what email address is that? What's the account? Who is that? So they sent to him. So they get a package back. You're going to get $56,000 back. We're charging you 20%. So we're getting 10,000 and change. You saw the email, right? Mm-hmm. 10,000 and change. And you got to sign this paper now. We got to do this now. The deadline, and this is what made everybody suspicious. The deadline is January 31st. So they were literally getting ready to sign all this paperwork. And somebody said those famous words, did somebody call Gilbert? Because they were looking at it and going, this isn't from Gilbert. This is from somebody else. Did somebody call Gilbert? And then she said, well, no, Gilbert told us the deadline was April 15th. This is not January 31st. I think Gilbert would have told us. So they kind of had this whole conversation. And she said, did somebody call Gilbert? So they sent an email, because they normally deal with Lynn. They sent the email to Lynn. Lynn immediately forwarded it to us. And I called her right away. I said, don't you dare sign anything. She said, Gilbert, it's the craziest thing. When I wouldn't sign, all of a sudden, they are bombarding my phone. They're trying to get me on the phone. And she goes, I knew that wasn't you. Because you have my cell phone. You'd call me direct.
And $10,000. She was like, this has to be a scam.
$10,000 to do a form. And this is the sad part, Lou. We'll take a break right after this. The sad part is this, is if I was to amend your 941s, I would just charge you that. Now, that is an hourly rate charge to go over, review it, and bill it. And I have only done a handful of these because only a handful of people, of my clients, has it been legitimate. There's only been a handful that qualify for this money. And I've had some people say, well, everybody's telling me that I qualify. And it's the big thing that you're seeing is one of the ads on the internet even says, if your CPA or your enrolled agent or your tax attorney tells you that you don't qualify, they're wrong. That's one of the ads. And I'm like, that is wicked. Because they're driving a wedge between us and the client, and it's making, wait, you've trusted us for 20 years, and now over this money, you're not? I mean, it's exposing a lot in a lot of things. But so I called her and I said, I just saved you $10,000. And when we looked at the numbers are wrong. They're not. I don't think they're going to get back any $56,000. It's not even close to that. So what would have happened if they would have done it? The IRS might have given them the money, might not have given them the money. They would have been audited. Now you're exposing yourself to being audited for that whole year, which you're opening yourself up to now being audited for 3 years. I mean, there's a lot to think about before you do this. And what would I have charged to have done that? I don't know. If that would have been, a couple $100?
Yeah.
A couple $100 per form is what I told her. I said, let's just say on the high end, let's just say this thing's $1,000, because there's actually there's going to be the three quarters on the 1 year and 2 quarters in the year. So there's 5 amendments that have to get done, and they should take an hour or two each one, give or take, to do.
They don't just send regular auditors, though. They're sending out the CI division.
Yes, it's criminal investigation that's auditing people. Yeah, that's what we're hearing. The people that have done this and have gotten back these huge amounts of money, that, like the guy that didn't even have a Schedule C and filed a tax return, he said, I didn't know. The lady told me, the lady. Well, the IRS don't care. The IRS saying, you're a business person. You should know, is what they're saying. You knew you didn't have payroll. How are you getting back $700,000?
Well,
and you can't go, I don't know. I didn't know.
So they did come up with the voluntary disclosure program for people who regret doing the ERC claim when they didn't qualify for it.
I'd like to know how many people are taking advantage of that. And you're getting some kind of a bonus for doing it.
Yeah, you only have to pay back 80% instead of 100%.
So in their scenario, they have $50,000. They got scammed. $50,000. The IRS comes back and says, because I haven't determined yet if they qualify. That's the thing. I mean, I'm still. And I told her, I said, I don't know that you qualify for this. And she goes, well, no, I get it. You told me that. We're fine with it. Whatever you say, we'll do. Because I'm like, I don't. She goes, that's what made me so suspicious. But so let's just say we do it. You use round numbers, $50,000. And, they were wrong. They shouldn't have done it. They can pay it back. So they would only have to pay back 80% of the $50,000.
Yeah, that's the incentive for getting people to disclose.
So the carrot.
That way they can go after the promoters, because a lot of people are doing this in good faith.
A lot of people are doing it in good faith. So that's the question, because you saw the email, you saw the forms. Was there a promoter's name anywhere on it?
No contact information whatsoever.
That was the other thing that made her suspicious. When you amend the 941, all my contact information goes on the bottom. Everybody knows, everybody whose tax returns I do, I sign off on it. You see my name, my address, my EIN number, my PTIN number, my IRS 5-digit PIN number, everything's on there. It's all transparent. You know who did that tax return. And it's on there. And that was another thing. She said that this part where they want me to sign, there's no information on there. Gilbert's information's always on there. Yeah. So who do you go after? And the email address was like billyjoe593@yahoo.com. Who do you go after? Let's take a break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite.
We are back. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. We are preparing tax returns. You know, the whole purpose of this program is we really want to have people that are listening be confident that we know tax law, that we spend hours researching. We're not just trying to put on a program and entertain. We enjoy what we do. We find a lot of humor in what we do. There's also a very serious side to what we do. Ultimately, it's about you and your money. And we're very aware that our advice carries weight. People act on the things we say, and we do take that very, very, very serious. We don't just do tax returns. We're financial planners. It's Carmona Financial Consultants. When we picked the name, we wanted it to really, cover everything we do. But it is about your financial life and what you do, whether it's investments, whether it's tax preparation, whether it's insurance. We also deal in that, life insurance, investments, insurance to protect your investments. So it's all about sustainable growth, and it's all about low risk, and there is a path forward. There really, really is. And we get caught up in the headlines and what's going to happen and this, that, the other thing, but there is actually a science to what we do. If you would like to schedule a meeting with us, my telephone number is 828-289-9300. Right now we are pretty much, focusing on tax returns, but we always, while we're doing tax returns, I'm always reviewing all these other things. And people know when they sit with me, I ask them, do you have a will? Have you got your will done? Is your will current? And I go over your beneficiaries. Have you looked at your beneficiaries on your 401k, your IRA, your SEP, your Simple? What about life insurance, your beneficiaries? And you would think, people say, oh, yeah, it's okay. And we find out they've got dead relatives as beneficiaries. Lou, we've got the stories about that. There was a man that still had his first wife on the 401k from 25 years ago.
Yeah,
oh, yeah.
That's a story for another program.
Yeah, the second wife wasn't too happy about that, but that's okay. So those are the things that we talk about. Again, my telephone number, 828-289-9300. So the last thing I want to say, Lou brought this up during the break, about the ERC, there is actually people going around trying to get you to refer clients to them and that they'll offer you a commission. Now, while that in and of itself is not illegal to do that, if the person wants to offer you a commission, wants to give you money to refer somebody, that's not actually illegal, but it is incredibly unethical. And the IRS really frowns on that, that kind of a thing, because you're promoting tax fraud is what you're doing. Yeah, and tax fraud is a whole other thing. Emily, we've got 20 minutes here, which is an eternity in radio. Last week I got into a topic that I wanted to just expound upon a little bit more, because I actually saw it this week. I started to read now somebody called us and corrected us and said it is the Epic Times.
Epic Times.
Not Epoch.
No, Epoch is British.
Okay, so that's why the British all say it that way. Okay, Epoch. But I kind of like saying Epoch.
Okay, but the guy that does the reporting, Roman, he says Epic Times.
Epic Times. Okay, so we're going with you on this one, Roman. Epic Times. So the Epic Times, their story that Social Security has increased, which everybody on Social Security goes, yay, you get your COLAs, right? There was an 8.7% COLA. Other COLAs, those are cost of living adjustments. Other COLAs are coming, so people are raising. So average Social Security recipient, average, is getting $1,827, $1,827. That's the average. It was $1,681, so it's up. Not a big jump, you say, but big enough. If you're married filing joint, 2 taxpayers, big enough to push you up into another tax bracket. Believe it or not. We call that tax bracket creep. I've used that term before, and some people didn't understand it. It's where the tax brackets aren't keeping up with inflation. You know, we've got these handy dandy charts that we always show. Those of you live streaming can see my handy dandy chart here, and so you've got these tax brackets. And what happens is, so as an example of just a married filing joint, and how the tax breaks are, it's from zero to $22,000. But what happens is, then if they give you a COLA and you're at 21,000 and you get this bump, and all of a sudden you're at 22,001%, you're now in a 12% tax bracket, and it went up. So the point of the story is, I didn't want to get into, number crunching per se, but the point of the story is, I wanted seniors to be aware. Please be aware, not necessarily seniors, just anybody collecting Social Security, to be aware that Social Security is taxable, number one. I have people tell me, Social Security is not taxable, and they look at me like, yes, it is. Social Security is taxable. What happens is that it's got its very own special scale, up to a 0.50% is taxable and up to a 0.85% is taxable, and that's the maximum of it that's going to be taxable. You have to have other income. So let's say, this is typically what we're seeing. Somebody's retiring, they're getting some kind of a small pension or some kind of a small retirement benefit from where they worked, and Social Security. Well, in the past, their tax has been minimal because what they were getting from their other income was so small that it didn't make any of their Social Security taxable. But now with these COLA increases, so they go out and they might get a little job. They get a job at Lowe's, or they get a job at Walmart, or they get a job, and hey, I'm just to get out of the house, like was what we hear a lot. Oh, I just did that to get out of the house. I'm working 24 hours at Walmart. Well, you add all this stuff together, and you've got taxable income, and it's bumping people up into another tax bracket. So the new amount has pushed some senior citizens over the threshold of having to pay federal taxes. So whereas before they weren't even paying federal taxes, now they're having to pay. And it's not that it's a lot of money. I mean, but it's I think it's just as a surprise. We're telling them, well, yeah, you owe, $800, $1,000, whatever it's going to be. It's different for everybody. But they're like, that can't be. I've never paid taxes. Most of them file a tax return because when they have that small pension or they get a part-time job, there's withholding. So they file a tax return and they get that money back, usually. So it's like, let's file a tax return. Others are filing a tax return just because, lock down their Social Security number, make sure there's no tax fraud, which has been recommended for them to do. But now when they're filing those tax returns, they're not getting that money back, and they're having to owe some. So for individual taxpayers, if the total income is between $25,000 and $34,000, up to 50% of Social Security is taxable. However, if that income is greater than $34,000, which that jump happens fast, up to 85% of Social Security can be taxable. So if you've got a husband and wife on Social Security making, and I'm just making numbers up, they're making $40,000 combined on Social Security, and they have some part-time jobs, now 85% of that $40,000 is taxable. At whatever tax rate you're at. So if you're at a 12% tax rate, 10% tax rate. So we're just saying it as a warning. Be aware. Don't assume it's business as usual. Don't assume it's business as usual. Things are changing. Tax brackets are changing, and these cost of living adjustments are. It was 8.7 last year. Do we have a COLA adjustment for this year yet? No, it's too early. They haven't released those yet. I don't know when they're going to release those, but we'll be knowing what that one is soon. We're expecting the same. Inflation's up, so we're expecting a COLA increase again. I don't know when. Let's go ahead and take our last break. We're going to come back, and I'm going to talk about, people say, Gilbert, give me some good news. What can I do to save money? Or I really don't want to open up an IRA. I don't want to open up a SEP or a simple. I'm just a small business. I'm going to talk about health savings accounts. I think they're the ultimate retirement account, and let me explain why. Let's take a break. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
Great local business, Forest City, concrete and grading. Call Sean at 828-447-5949. Sean is a licensed general contractor. He can do your job from site development to completion. That's Forest City, concrete and grading. Call Sean at 828-447-5949 and tell him Gilbert Talks Taxes sent you.
A good sign is good business. Make your business stand out with a professional sign from Dia Signs and Graphics. Successful companies all over the United States trust the team at Dia Signs and Graphics. With 25 years of professional experience, we have the ability to present your company's image in the best light. Not only display signs, but Dia Signs and Graphics can print banners of all sizes. If you need magnetic signs or window and vehicle graphics, call on Dia Signs and Graphics today. We offer a full line of sign products for any event. 3D, sandblasted, storefront, and monument signs are just a part of a complete selection of quality signage. Professional signs and banners to fit any budget. Let your business stand out. Call Dia Signs and Graphics today at 286-4900 or stop by the sign shop located on Main Street in downtown Spindale and check our website for more suggestions at diasignsandgraphics.com.
And D&S Signs has moved. They're now at 1621 Porsford Road in Rutherford. That address again, 1621 Porsford Road. For dependable, complete, and professional auto service, see Tri-City Tire Service. With years of experience, they care about their customers, and it shows. From complete auto service and brakes, alignments, tune-ups, and oil changes to North Carolina inspections, Tri-City Tires got you covered. They carry tires for commercial, farm tractors, and ATVs. Tri-City Tire Service, your local tire and auto service center, 221 Daniel Road in Forest City. Call them at 828-287-8778.
This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. So we had the question during the break, when you're getting a refund, don't get excited because that's actually your money that you're getting back. Yes, that is true. And you're getting it back without interest. So, that's always been the argument. Now, if you're getting money back because of child tax credit, which is most Americans, that's the money they get back, is child tax credit. Earned income tax credit and child tax credit. That's why Congress is making this big deal about this $200. It's $200 is all it is. Again, I'm not diminishing that. It's $200. If you have 3 children, that's $600. That's, but what's all the other stuff Congress is sticking in this bill that people don't even understand? There's all kinds of things in there that if people stopped and read these bills, it's like, wait, you're doing what? And it's all about money. It's all about more money. They want more money. Oh, by the way, we'll give you $200 to just shut up and leave us alone. Basically what it is. But the money you get back is your money. That's why when we try to reduce your tax burden legally, we're always conscious of the decisions we make, especially in the investment side. How can we reduce? We call that tax drag. What's your tax drag on this? Really good tax planning, and I say this to people, and they're not in agreement, but when it actually happens, they're like disappointed. Really good tax planning is when I do your tax return, you owe 0, you get back 0. That means I nailed it. I mean, that is 0. I nailed it when I did your. Now, these are people that are not just wage earners. These are people that have investments, and I'm doing withholding on your investments, and we're trying to calculate all that stuff out. That's like. But realistically, if you're plus or minus $500, that means you might owe $500. You might get back $500. But if your income is business income, you're a portfolio of rental properties or investments or whatever, we can actually do that high level tax planning. Where somebody the other day, they were laughing because I always talk about 0, 0, 0. They owed the IRS $703. They were getting back $703 from North Carolina. They said, "You nailed it, 0." I said, "Well, I was really hoping it'd be a little more balanced than that, but I'll take it." Okay, I'll take it. Hey, a win's a win. I'll take it. But yeah. So and it just happened. The numbers fell that way. I did not plan it that well. I think he had some state withholding is what happened on something. But anyway, okay. I want to talk about health savings accounts. So you're self-employed. Okay, and you want to do something to put money away. You really don't want to open up an IRA. You don't want to open up a SEP, a simple, but you want to do something. I would encourage you, and this isn't something I'm selling. Like I do this. I do this. Why doesn't that sound right? I do this. But you can get a health savings account anywhere. Banks offer them. There's a number of places you can set up an HSA. So look around, you'll find them. If you've got questions, you can call me, I can help you. I can help you set these up also. So if you're looking to save money in retirement, the first account you should open and fund is not an IRA. This is what we're saying. Not an IRA, a regular or Roth or a 401k. If you qualify, your first retirement account should be a health savings account. Now, don't let the name fool you. The health savings account may be, and I think it is, from just what I've been researching and reading about them, the ultimate retirement account. Now, you're not looking to necessarily just save money for retirement. You should still open an HSA. Now, I've got an article from Bradford Tax Institute, good people that do a lot of research for me. I can pass it on to you. Send us an email, give us a phone call. I will get this out to you. I've already been sending it out to a lot of my clients. The HSA is the only tax-advantaged account that gives you both a tax deduction for the money you put in and tax-free withdrawals. That's the big deal. Yeah, so you fund an HSA. You fund an HSA for whatever. You put some money in there, and then you can go use it to buy your medical stuff. And it's a broad definition of what counts for medical stuff. Everybody thinks about it as just prescriptions. No, there are a number of other things you can do with your HSA. Okay, and when you use it, it is tax-free withdrawal. You don't pay tax on using it. And the money you put in reduces your taxable income.
But do you have to prove it was used for medical?
Well, you're going to have to, yes. If you get audited, so what happens is you're going to get and I always get these confused. You get the 5498 saying you have the account, and then you're going to get an HSA statement. It looks like a 1099 actually, that says you withdrew $3,000. Let's just say you withdrew the 5498 tells you how much money was in the account, and then you withdrew it. The form on the tax return, you're just going to say how much money you put in it, and then how much of it you used, and it asks you what percentage of it was used for medical. Of course, we're going to say all. If that's what you did. Now, if you took some out for personal, then you pay tax on it. Okay. So, but you're not going to do that, Lou. You're going to use this just for medical. Yep. So what happens if you put $3,000 in it and you didn't use all $3,000? It just rolls over to next year. And it just keeps rolling over. So what is, it just keeps rolling over. We're actually looking at these, to implement these into our employee benefit package. I was hoping to have it done before the beginning of the year, but we had other things happen, like taxes. We're getting ready for tax return season. An HSA is a tax-advantaged medical savings account. It's much like an IRA that is paired with a high deductible healthcare plan. To have an HSA, your healthcare plan must have a minimum annual deductible of $1,400 for self-employed coverage and a maximum annual deductible of more than $7,050, which is pretty much standard for any healthcare plan. It's pretty much the standard. So if you and your family members are in poor health or have health issues and currently need substantial amounts of expensive medical care, a high deductible healthcare plan may not be the best for you. If you don't require much medical care, however, the high deductible plan with an HSA can work very well for you. Now, if you're self-employed, just for the last few minutes here, if you're self-employed and your employer doesn't provide health benefits, you can open an HSA yourself with an HSA provider, which may be a broker, a bank, a credit union, an insurance company. A number of people offer these. As a matter of fact, I've never heard of anybody having trouble finding a place to get an HSA. I just had some clients that opened up HSA accounts at their bank, and I'd say the bank name, but I don't remember it. I don't want to give them a plug, but it was like a local bank. It was a main bank. A broker can do it, which is what we are. I can actually help you do that. And this isn't, again, something I'm promoting like come to me for your HSA. Go to whoever you're working with now. If you've got an insurance agent, go to him, really. If you've got a financial broker you're working with, go to him. I just want to tell you that an HSA is a thing. Most people don't think about these. You can enroll in an HSA qualified high deductible health plan through your Affordable Health Care Act if you're getting Obamacare, if you're at the marketplace. You can get it through the exchange, or you can get it outside of the exchange. Now, if you operate your business as a corporation and you work in the business, you are an employee. So there's some rules there. Many corporate employers offer HSAs and high deductible health plans as an employee fringe benefit. If an HSA is open through an employer-sponsored program, the money in the HSA account belongs to the employee. So what happens there is some people are getting it through their work, but that is your money, okay? Even though it's being put through, people say, oh, well, my employer's giving me that. No, it's your money. So a lot of people don't even know to report this on their tax return. How much time do we have left?
You got about
a minute.
30.
So a lot of these HSAs, the way they work, Lou, is they just give you a debit card. And you go to the store. Now, I've been told this. I've never used it this way. But I've been told, one lady told me she goes to the store and rings up everything, gives them the HSA card first, and whatever qualifies gets put on the card, because it covers things like, it covers what we would call sundry products. Am I saying that correctly? Cotton balls, Q-tips, Band-Aids, over-the-counter medication. It's not just prescriptions. It's not just quote-unquote medical stuff. So that's how she was using it. And then whatever was left, she'd put on her regular card. So if you ever get audited and ask for proof, there's your proof. You got your receipt. Of course, when you do prescriptions, there's your proof. And, I mean, if you ever got audited and you did it just for prescriptions, just a printout from your pharmacist is all you need. So HSAs, they're worth looking into. They've got cost savings. Oh, this thing goes on for 6 pages. I'm not going to read the rest of it. We are out of time. I will be back next week. Gilbert Talks Taxes. AM 590, right here on WCAB, AM 590, FM 100.9. Boom.
Sis Ford, located on Oak Street in Forest City, is now Legendary Ford, still locally owned and still offering the same local hometown service as always. The new family at Legendary Ford is working hard to prove to you that they want your business. So stop by today and see the large selection of cars, SUVs, and trucks on the lot, and let the guys at Legendary Ford help you choose the perfect vehicle that best fits you and your family. Visit them at 565 Oak Street in Forest City, or visit the website at www.legendaryford.com, or call them at 245-1626.
It can be a tough call when it comes time to provide a daycare service for an aging parent or a loved one. You can always depend on Rutherford Life Services for a safe facility that offers medical monitoring, nutritional meals, fun activities, and is a loving environment. Rutherford Life is licensed by the State of North Carolina Division of Aging. They will be glad to answer any questions you may have. Call them at 288-1697. Rutherford Life Services offers a trained staff of professionals who you can entrust your loved one to. Rutherford Life Services is located at 230 Fairground Road in Spindale.
Listening to the radio driving